So you've done everything right. You've budgeted, you've saved, you've gotten pre-approved, and now Washington shuts the whole thing down. If you're wondering how this actually impacts you in today's video, we're going to break down how the government shutdown is actually impacting the housing market.
Jeb, I feel like home buyers in the current market meaning the last couple of years, they're like Job. They have to have the patience of Job to get through this. Every time we think we're getting some clarity, we have a path, we know what the future might possibly look like, we get another curveball. So just a month ago, we're sitting here less than a month ago. We're like, hey, we got a Fed meeting, we got a Fed cut. We got minutes from the Fed yesterday saying, hey, what they weren't necessarily unanimous on wanting to cut, but it sounds like they're going to cut further. But that's largely data dependent. And now our government is shut down and not providing any data. On top of that, there are many other things the government is not doing, which in the short run, most of what the government does is non-essential. We're going to talk about some of the things that are very essential, and some of them are very essential to those of you in the market to buy or even refinance right now. The reason why I even wanted to do this episode, Jeb, is when this first hit, I see 3, 4, 5 articles pop up, and they were the most absurd, ridiculous articles I've ever read. They could have been written by ChatGPT. They're saying it's going to impact this, it's going to impact that. I'm like, no, it's not. It could after 45 days, but not immediately. So really what we want to talk about is 10 days into this, what are we actually looking at impacts to people in the market right now?
Yeah, I mean, a lot of this stuff is headlines, right? It's meant to grab viewers and readers just to click on articles and that sort of thing. And honestly, most of them don't carry any weight. This actually has the potential to carry some weight in impacting home buyers, the housing market in general, and whether or not, if you're under contract, whether you can actually close on a transaction. So with that, Josh, let's talk about the 4 ways that it is impacting housing, has the potential to impact housing even further.
Let's look. What did I just say? Like right now, today, 10 days in, not having a huge impact. But the longer it goes, the more it's going to start impacting things. And let's look at historically what we've seen. The longest government shutdown, 2018, 2019, was 35 days. So we're still 3.5 weeks away from that. Prior to that, 16 days in 2013. We're a week away from that. It seems like that. If I were a betting man, I would take the over on the 16 days at this point, with us being 10 days in. A little bit of insight on the timing issue. Friend of the show, Barry Habib. He is a board member at Fannie Mae, spends a lot of time in Washington now, and he ran into House Majority Leader Eric Cantor, and he said, hey, how long do you think this thing's going to go? He said it could easily run into November. And he said, until people start feeling pain and applying pressure on their elected representatives of both parties, no one is feeling enough pain to really get this resolved.
Well, let's talk about that, Josh. We're 10 days in. It's October 10th, right? This started on September 30th. So if it runs into November, right? At this point, if it ran into November 1st, that would be 30 days into this thing, right? And our longest one is what we said, 35 days. 35, yeah. So this easily has the potential to go longer or be the longest of what we've seen. But, you kind of started saying it's not really having an impact now. It's not, but there are certain loan types out there. There are loan programs that if you were to go to close today, you can't close because of the government shutdown. And I think that's a good place to start.
It's a great place to start, and let's close the loop on that. We have a listener to the show, a longtime listener. He's been in escrow, I want to say, since June on new construction. It's going to be complete on October 23rd. We were doing USDA financing for him because he wanted to do the zero down. We always talk on the show, if you're eligible, if you and the property are both eligible for USDA and FHA, USDA is a little better. Same interest rate, lower mortgage insurance. You don't have to put a down payment, blah, blah, blah. That's why he wanted to do that. Well, yesterday afternoon, we had to pivot and switch it to an FHA loan because something unique about USDA loans relative to FHA and VA, these loans are all insured by the government one way or the other. So you say government shutdown, all 3 of them are in trouble, right? Not so, because with FHA and VA, the insurance goes after closing. So the lenders are delegated to do all of the underwriting, all of the closing, and then they send it in for insuring by FHA or VA. USDA does a conditional guarantee ahead of closing. So they're not issuing any conditional guarantees. So I suppose if you were far enough in the process with the USDA before the shutdown happened and you had your conditional guarantee, you could have closed here the first few days of the month. But at this point, anyone who's still clearing conditions and hasn't gone in for that conditional guarantee, USDA loans will not close until the government shutdown is over. And then there will be a backlog to clear through those conditional guarantees of everyone that's been waiting. First off, a huge thank you. The fact that you keep coming back every week, we do not take that lightly. What started out as two guys just sharing what we know has somehow turned into this growing community, and that's all because of you. More importantly, we have a lot more to do. If you like what you hear, make sure you hit the follow button. Less than 1 in 4 regular listeners have done that, and we'd love to get that figure higher and keep feeding the algorithm so we can grow the show. Our plan is to keep doing what we do, bringing the right guests, tackling the topics that actually matter, and keeping it real every single week to help you become an educated home buyer. We appreciate you for being a part of our online family.
So, Josh, I have a question, and I'm naive in asking this to some degree. FHA, VA, they insure after the fact, which basically means if I'm a lender and I'm approved to do VA, FHA loans, I can close on those loans, and then after secondary market, I can sell them to Fannie Mae whenever the government opens back up. We often know that some of these lenders put overlays on their programs, and they say, hey, listen, even though FHA allows us to do this, we're not doing it because of, our guideline changes. Is there an opportunity? Is there a chance that some of the lenders out there that are doing FHA loans just say, hey, you know what? We don't want to hold these things on our books and potentially not close on an FHA loan because we don't know how long we're going to have to hold on to these?
Well, based off of history, all the lenders, we're approved with over 70 different lenders. It's actually over 100, but the ones that are doing the vanilla stuff, FHA, VA, USDA, Fannie, Freddie, 70 different investors. And I have not seen a notification from any of them that they're not comfortable at this point. Basically, because what are we talking about? We're not talking about a company shutting down and maybe this company doesn't come back to life. This is the U.S. government. It has to come back online. So no fears or worries at this point. But I could see a smaller lender when that risk becomes too great. If we had a 60, 80, 90-day shutdown, some smaller lenders may have to start making choices. Or if you're in an area where you're dealing with a small local bank that happens to do government loans and they're not comfortable with that level of risk, it could happen. But for the most part, not super worried about that right now.
Got it. Good. So good, bad, indifferent, however you look at it. So I guess if you're listening to this right now, you're in process with USDA, got to be a little bit more cautious. Don't, if you're under contract, definitely be having conversations with your lender, right? Don't run at this blindly. If you got approved 2 months ago, a month ago, USDA, and you're just now finding properties, probably a good time to touch base with your lender, have a conversation, say, hey, if I go under contract, am I in a position to close? What are my options? And I think if you're out there listening and you're kind of new to the process, find a lender that understands this sort of thing, right? What is actually impacted in this process, can guide you through it. Our team does a lot of this stuff, and love to help you. There's a link in the description of the video if you want to work with the team. So anything else we should add for USDA, Josh, before we jump to the next one?
It's unlikely to impact you. 1 to 2% of the market at any given time is doing USDA loans. But it's an important one because a lot of people know, hey, I'm in a rural area. I don't have the 3.5% down payment or 3% to go conventional or FHA. So from that perspective, it could be a dead end for some people. For our borrower, the listener, fortunately, he has a down payment and is willing and able to shift over and go FHA, but it could be a dead end for some people. But for most, 1 to 2% of the market, not a huge impact.
Okay, so 1 to 2% of the market for USDA. An article I read this morning, Josh, 42% of the market could be impacted to some degree, which is 67,000 plus transactions. And that's due to flood insurance. Here in Southern California, roughly 27% of transactions to some degree could be impacted as a whole. How's that fall into this whole government shutdown?
So why is it important is the vast majority of flood insurance is done through the National Flood Insurance Program, also shut down. So if you have a policy through NFIP, you're covered. It's not like your coverage lapsed because the government isn't operating right now. But if you need to get a new policy, they're not issuing new policies. So what I have seen, I have not heard from any of my contemporaries, any coworkers here, any of our investors saying, hey, this is killing deals, because there is private flood insurance out there. Private flood insurance, all insurance is difficult to get right now. Private flood insurance is more expensive. It's going to be more time consuming. So I suppose if you were tight on the debt to income ratio, a doubling of the flood insurance could certainly compromise that policy. This could come into play potentially on a refinance if you're trying to close and your renewal's up and a lender is worried about that renewal. So I would put this under the big deal potentially, but in reality, I just haven't seen anything boots on the ground from any of our investors, anyone that I talk to around the country in different, because this is regional, largely regional. The flood stuff, there are flood zones everywhere, but largely, like the Gulf Coast is heavily impacted, large parts of California here. So as you said, 67,000 properties currently in escrow are in a flood zone. So I believe we would be hearing more and bigger updates on how we're going to solve this problem if people were running into hard stops with it.
Do you think it's fair to say, Josh, the deeper we get into the shutdown, the more potential impacts all of this stuff could have? Right? People could get all of these things could be a bigger issue the deeper you get into it, just because then there starts to become a little panic.
I would say that 100%. Something, Jeb, that we didn't even put on the list here is right now, no one's missed a paycheck. So October 15th is the first federal payday that will not get paid. So if you're in process and you work for the government and you don't get a check, that's an issue. Could a lender just say, I'm not going to even fund the loan? Possibly. Again, haven't heard of that, but the longer it stretches on, you miss one paycheck, you miss two paychecks. It could impact your ability to have the funds to close, depending on where they're coming from. So 100%, the longer it goes on, and the longer it goes on, it starts affecting market psychology. Like the Wall Street Journal ran an article on how the government shutdown is going to impact the Washington, D.C. real estate market. Almost everyone that buys in, no one says, hey, I want to go live in Washington, D.C. They say, I work in the government. I have to be in Washington, D.C. I need a place to live. So that market is heavily impacted by this and will be more so the further it goes on. So I don't know that congressmen and senators and staffers are going to suddenly come to Jesus because of this, because they're trying to close escrow, but they'll definitely start seeing it and feeling it more as it goes. And one of the things, that Eric Cantor told Barry Habib is just that October 15th, civilian federal employees will miss their first paycheck, or the military misses on the 15th, civilian employees on the 24th. So they have the politicians have a little bit of cover right now that, hey, we can play chicken with each other and no one is really feeling pain. We're going to feel a good first chunk of pain on the 15th and then follow through on the 24th. It's going to get bigger because there's more civilian employees than there are military employees. So the CBO estimates there's going to be 750,000 employees without including the military. So, and granted, we got 300 something million people in the U.S., so it's less than a million, but it's a significant portion of folks that work
one
for
of
the
the
federal
things
government.
I read initially when this whole thing was kind of in talks, and again, don't know if it can be done, don't know how much power or weight is behind it, but President Trump was talking about, hey, listen, we're not going to do back pay. So if you miss a payment in this whole thing, we're not going to go back and pay it, which to me seems like, hey, if that were the case, then that is a real issue. I don't know that that's on the table, and I know there's probably a political fight between that, and it's probably a negotiating tactic to say, hey, listen, agree, you agree to me, or I'm going to do this, and it's going to impact everyone else. So it's better off that we get past it. And I don't know if you heard that or read that, but that could be, psychology with lenders wanting to close on transactions.
Not only, Jeb, just not giving them back pay, saying some of the people that are released, if they're in non-essential positions, they're not coming back. So that would be a horrible form of collateral damage, because any of the people that fall under that category that are federal employees right now, they didn't cause the shutdown. We have two parties that want to fight with each other more than they want to serve the employees of the federal government and the people of the U.S.
All right. So the next one is something, Josh, that could potentially impact me if I were in a position to refinance or buy a house right now. And that is the fact that the IRS is shut down. And what happens is when you close on a transaction, one of the conditions typically, unless I'm wrong, Josh, is there's something called a 4506, right? Which the lenders verify your tax returns with the IRS to make sure, hey, listen, these tax returns that were given to me are actually accurate, right? The information on here, the taxes have been filed for one. And secondarily, that the numbers on here match the federal government. I just filed my taxes, a week ago? There's no way in which the government has gone through those and been able to do the transcripts and what have you. So
you just closed the loop for us, because if someone filed in April when they were due and didn't do the extension, it's all been processed and the transcripts are going through just fine. I've got a buyer in Florida right now that we needed a record of account. He was able to go onto the IRS, and thankfully I'm like, cool. The website is not an employee apparently, because it is still getting paid and still functioning.
It's just not updated.
So it spit that out, but not updated, right? So all of us, I'm on an extension. So when I file my taxes here before October 15th to meet that deadline, if I need to get it verified, there's no way that it's going to be processed. I mean, some of that is automated, right? 90% of returns, I'm pulling that number out of my rear end. So if you work in tax preparation and say that's wrong, but a vast majority of loans are electronic, or loans, tax returns are electronically submitted. So you'd like to think that it could go through and be processed, but there's some sort of manual process there before it actually gets approved and can be validated and verified. So again, the longer we go here, that could be an issue. And for jumbo loans that are largely oftentimes going to self-employed borrowers, this could absolutely impact closing.
So Josh, another random question, something that's not on here, pulling this out of my rear end as we discussed. The Fed is federal employees to some degree. Do they meet on the 29th, the 30th, if we have a shutdown?
Well, that was our next bullet point here, was that when they meet later this month at the next meeting, which we didn't do the research to find out whether they will actually be meeting. I believe they do.
I think they do as well. I haven't heard otherwise, but I'm just randomly thinking about it.
I believe they do. We will do a little research and give you guys an update on the live show next week. But they're not going to have all of the data. So part of it's been like watching paint dry here. We love talking about the bond market. We like looking at the technicals. We like looking at the fundamental analysis of all the data coming out. After that last Fed meeting, we said, hey, we're going to get another jobs report and another CPI report before the Fed has to make another decision. Well, we're not going to. We didn't get the jobs report, so I believe that if they opened up the government today, we would have that report. It was just delayed. It would be released before the next Fed meeting. But if the government is still shut down, even if the Fed does meet, they're not going to have that data. They're not going to have the CPI data. So there's all sorts of data that generally comes out on a daily basis of varying degrees of importance. We talk about the big ones, which is CPI, PCE, jobs, weekly claims. We're not seeing the weekly unemployment claims not being processed and compiled and released. So from that perspective, the market's not really moving. So when we look at technical analysis, when we show you guys the charts and the candlesticks, it's a visual representation of what's happening in the market based off of the data coming through. And it's just been sort of this weird choppy back and forth, better one day, worse the next, but going nowhere due to no data. And the longer we have no data, the less likely we are to see movement, but then the more likely we are to see a more violent movement, better or worse, once that flood of data then comes out.
Yeah, no, good stuff. So kind of know what's impacting the market, Josh. We've talked a little bit about what's not being impacted, but I think it's important to also point out the other side, right? These are the things that can be impacted right now if you're under contract. But let's talk about the stuff that, hey, is still, life is still happening, right? Loans are still closing. People are still buying homes, still able to get their keys. So if you're Fannie, Freddie, conventional loan at the moment, FHA, VA, you're still in good shape, right? No shutdown impacting that.
Yeah. And also the same thing, if you're looking at jumbo loans where you're going to a private bank, a portfolio lender, any of the non-QM stuff, debt service coverage ratio loans, bank statement loans that go to private lenders, really not seeing any issue with that unless you somehow got hung up with a tax return issue that the IRS could impact. So for the most part, it's been status quo, but we're only 10 days into this. It will start impacting us. We're hoping that 3 weeks from now, we're not doing an update on what's changed now that the government's been shut for a month.
Yeah, no. So let's talk about if you're, we're planning on doing USDA. If the house that you're buying is in a flood zone, what should you be doing right now, Josh? You should be having that conversation with your lender. We discussed that earlier. If you're new to the process, or maybe if your lender doesn't know, now's a good time to pivot. Talk to somebody that actually knows what's going on. There's a link in the description. You can get in touch with us and the team and have that conversation. But is there anything else that needs to be kind of on the radar of people that are out there buying a home and using this sort of program, USDA, flood insurance, maybe just filed their taxes, that sort of thing?
Those would be the folks that just have that conversation with your lender. It's going to be program specific. It's going to be lender specific. So you want to have that conversation and go through it as far ahead of your scheduled closing as possible. Like if you were scheduled to close on the 5th, like we didn't have a whole lot of time to adjust and plan and prepare for this. But now, like our guy in Texas, he's closing on the 23rd, and we reached out to the builder and we said, hey, we may have an issue. Are we okay with pushing back till the government opens up? And they said, no, we are not. So come up with another solution. So that's why we pivoted to FHA to make sure that we're going to be closing on time. So there's generally a plan. There's alternative routes for most everything at this point, whether it's working with the seller to delay closing or shifting and going another direction, if that's a possibility for you. So planning, communication, staying on top of it. From your end, Jeb, so much of this is just don't wait till the 11th hour. The buyer side should be doing their legwork to know, am I impacted? And if so, communicating with the selling side as early as possible.
Yeah. So if you're in that process, just make sure you're talking, having conversations, asking questions, right? Don't just hide, have the conversations now, know what the potential, risk is on both sides, and then make an informed decision the best that you can. And if our team can help, make sure you reach out. But until next time, buy right, borrow smart, build wealth. Adios.
Amigos.